Apple turning positive. Look at that here. After hours revenue coming in better than expected, up 8% year over year, $90.15 billion. iPhone revenue coming in just a bit light, $42.63 billion. Street was looking for $42.67 billion, so just missing Wall Street's expectations. Here to break down the report, we want to bring in Ivan Feinseth, the Tigress Financial Partners Chief Investment Officer. So, Ivan, when you take a look at the after-hours action, we've been bouncing around just a bit. We were off 4%. Now we're back in negative territory, off just around 0.5%. What's your initial reaction to this report?
It was a great quarter. I mean, yes, it missed slightly in some areas, but the macro environment's tough. So to do the job they've done in this quarter is very good. And, FX has been a significant headwind. And unfortunately, sometimes foreign exchange is a headwind. Sometimes it's a tailwind. It's been a massive tailwind. But most importantly, the iPhone 14 was only available to ship in the last week of the quarter. And they could have shipped more, but they also face supply chain constraints. So they are not able to build the number that they need to. So the demand is strong. And the slight misses in this environment, I think, makes it an incredible quarter. And I think any weakness is a major buying opportunity.
So all the concerns over waning i14 demand issues, you think much ado about nothing when you look at this report?
Absolutely. I mean, they really they missed by less than a percentage point in most areas. It was just so small, and given in this environment, it's a phenomenal job, and the demand is there. And key, while the services revenue again slightly weaker, it's about growing the ecosystem and expanding the services base. And they also just announced a services increase for Apple TV, the Apple Plus bundle, Apple Music, and several of those services by $1 to $2 a month, which, based on their massive user base, is a significant amount of money. Not that significant to the consumer, but certainly very significant in the aggregate for Apple, which kicks in, next quarter. So there's a lot of wind at their back.
Yeah, Ivan, I wanted to ask you a little bit more about that bump up in price, what that would mean for Apple in the current quarter. Well, I guess more so looking out to 2023. You mentioned it will boost their revenue. I guess by how much is the question. What are you forecasting?
I don't have the number. They have, I think, 800 million active users. Mm-hmm. And so by $1 or $2 a month, you multiply that out, and that's a lot of money. I mean, it's let's say it's $1 billion, another $1 billion a month remember that this incremental price increase is mostly profit. I mean, I'm sure costs have increased, and certainly in the case of Apple TV, the cost to produce content has gone up, and the need to pay people more has gone up. But the incremental increase to revenue is much more significant than the incremental increase in cost. So it is a net positive, and they still offer a great value. And Apple has a very loyal customer base, and they are still a long way into a massive upgrade cycle. There are a lot of people with iPhone. I know people with iPhone 8s, but certainly there are a lot of people with older iPhones that will be, 1 to 2 years into their contract that will be eligible to upgrade next year. So this upgrade cycle is pretty powerful. And the other important thing to remember that demand is strongest for the more expensive phones. So consumers want the Pro and the Plus and the more expensive phones, because consumers are willing to pay up for phones, for smartphones, and for the service, because it's such an integral part of people's personal and professional lives.
Yeah, the demand all on the pro side. Another question coming in was the impact of the China COVID lockdowns. Ivan, what are we seeing there? Are you able to take away anything from that?
Well, they did report strong China results, but China has been under they have this zero COVID policy. They locked down right away, and it has been disruptive to companies that do business in China, as well as China's own economy. But, eventually, hopefully the COVID issues will subside, and then the economy there will pick up. So I think Apple is in a great position. the stock has been down, and I think it's a buying opportunity here. And I always say any weakness in Apple is a buying opportunity, and history has shown that to be the case.
Yeah, no guidance since 2020. So what are your biggest lingering questions for the call?
Well, I think the most interesting thing, especially with what's gone on with Meta platforms, is that the anticipation of an introduction of a virtual reality headset from Apple, and what that looks like and how that integrates also into their services revenue, because they already have a operating system for their virtual headsets that has been launched, and they also launched tools for developers to start to make content for that. So we have a whole nother wave that is very fascinating of additional potential sale of hardware and software and services. So there's still a lot of exciting things ahead. And the fact that the wearables market continues to grow with the new launch of the Apple Watch, the Apple Ultra Watch, and the new AirPods. Again, there's a huge upgrade cycle for that. And that is already proving out.
So overall, Ivan, it's been a gloom and doom story in tech, no secret there. But what does this report tell you about the environment as a whole, the macro environment and the headwinds?
It still exists. It's a tough environment, but yet Apple, I think, is enduring pretty well. So to have these just tiny shortfalls from expectations that are almost insignificant is a major positive.
Chalk it up for another W for Mr. Cook. Ivan Feinseth, good to have you, sir. Thank you.